In this video, learn the right way to use technical analysis for momentum trading. Hi, I'm Mike Bellafiore, co-founder of SME Capital, a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, we teach a developing trader with a trade example he took how to use technical analysis to determine the buyers are in control with the momentum trade. Let's get to work on sharing this enduring technical analysis principle so you can grow your trading account. All right, Tori, why don't you provide a little context as to who you are and why you're here?
So my name is Tori Hudson, and I am from California. Graduated from USC and with a degree in history, and shortly thereafter I was trying to find what I wanted to do and stumbled across the stock market and started watching videos and found S&B's YouTube channel and decided that this really interested me. This piqued my interest and I wanted to do this, but I didn't know how to go about that. So I just kept on watching videos and kind of traded on my personal account, and I had a really hard time. For the first year or two, I had a really hard time until I reached out and I tried to do the internship with S&B. And I didn't get that, and that was 2 years ago. So I was put on a path into S&B by Jeff, by one of the traders that works here, Jeff.
Through the SME training side. So you
Yes.
are coming to us through the SME training side, which is another part of SME Capital. And you are an SME training in-house student right now.
Yes, sir.
And presenting to us a playbook trade from your work presently. And I'm curious, what's your ultimate goal?
To work at S&B.
Okay. Ultimate goal is not, hey, I want to go back and trade my personal account better. Your ultimate goal is, hey, I want to get hired by the firm. And this is one of the ways that you can do it. If you don't come in the front door, if you're not an intern who then gets offered a spot on the desk, there is SME training, and you can take the same training. And if you stand out, then, and we like you, and you like us, and you fit in, and you do good work, and you show some good results, there is a path to interview and be hired on the desk. And there are people out there, even though there's not a lot of traders on the desk right now because of COVID, there are traders on the desk right now who did go through that path. So that does happen. And so, well, I'm a little nervous for you though, because you have to shine a little bit more than maybe some of the others since you're trying to impress the firm. So let's see what you did.
So early on in my trading career, something I've noticed is a lack of psychological preparation, and I've made it an intention every morning when I wake up to get my mind in the right spot. And by that I mean, as Mark Douglas says, trading in the zone. Trading is as much psychological as it is technical or fundamental, if not more. So when I get up, I make sure my mind is ready to go. In many ways, for me, I like to frame it around a battle. I make sure my mind is ready to go to battle, asking questions like, have I had a good night's sleep? Is my mind in the right place? Do I have any lingering emotions from previous trades? Those are all questions that I think that are important to ask. And those are just a few of the questions that I ask myself. I also gather a quote book in the morning, just something to kind of rejuvenate my spirit and get me in the right mode. Here are some of the quotes that I chose for this day. Two of the ones I'll point out is every battle is won before it is fought. And essentially that just means if you fail to plan, you plan to fail. And Bella also chose one of your quotes, trading is a sport of survival, reinvention and perseverance, even for the successful trader.
I like that one.
So I found that doing this for myself, and maybe it's working out or whatever you have to do to kind of get your mind in the right spot, but these quotes kind of help me like hone in like a guiding missile on what I need to be doing for that day.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Now, on July 21st, the big picture market fundamentals were a little bit hazy. So I just saw that VIX was down 12.3% from the previous day. And there were surging COVID cases related to the Delta variant, which was reigniting fear. And that was probably the biggest one that I saw for the news for the day. I also saw Treasury yields pacified investors' concerns that a rise in cases would slow down economic recovery, with the 10-year Treasury yield jumping back to 1.2% after hitting a 5-month low of 1.1%. There were also a string of upbeat earnings from some companies. I think Google just reported for the previous few days.
Yeah, and this is great. And what I really love what you do here is you mark how the VIX was on this particular trade. That is something that's super important. Just before I came in here, I got an email from an independent trader who was saying, hey, I'm struggling this year. My playbook from last year is not working as well as it is this year. Can you give me some hints as to what I ought to be looking at? And one of the things that I shot back to him is, well, yeah, your playbook is going to be adjusted for this year relative to last year. And I'd say one of the most important variables for that is the VIX, volatility,
Absolutely.
that it is lower. Now, it shot up a little bit here from even much lower levels, and then is subsiding a little bit. But VIX is much lower this year than it was last year. And you can't sit there and say, I'm going to trade the same way when VIX is 15 as you do when VIX is 25. That makes no sense. Those are two different markets. You know, for a long time we had VIX even at 12. There are certain trades that work when VIX is 12. Okay, for years, VIX had trouble peaking its head above 15 for years. And then it did. And even when there was a difference between VIX being 12 and getting above 15, there was a different playbook. Certain trades started working much better. And now, in this new era where volatility really picked up, you know, we're starting to look at measures of VIX above 15, VIX above 20, VIX above 25. But when you're doing your playbook and you're archiving certain variables in your playbooks, you have to archive what the VIX was on that particular day. And you have to take note and potentially think about different playbooks for different VIX levels. So for a long time, I would do presentations like this, and I'd say, if VIX was below 15, around 12, we wouldn't play marketplace stocks. We wouldn't trade the overall market. And then I'd say, if it got above 15, we'd think about actually making market plays, looking at SPY and volatility and big caps that move with the market. And then if VIX got above 20, then we certainly would be trading and looking at making market plays, trading the SPYs, trading volatility products. And you know, that was the guidance that we gave guys for years. And then we ran into the last 24 months where volatility is elevated. All right, but you know, my advice to that particular trader mostly was, you really need to pay a little bit more attention to volatility. Momentum trades are going to work better when volatility is higher.
Absolutely.
Certain fade trades are going to work better when volatility is higher. Market plays are going to work better when volatility is higher. Breakout trades are not going to work as well when volatility is 12. And so, you know, and when volatility is lower, RVOL becomes even more important in your stock. And so, and I see this a lot. This is such an important factor that you're putting in there for your playbook trades, adding the VIX as a key variable to your trade and keeping note of that and keeping note of your stats when VIX is 15 or 20 or 25 for certain trades, and noting that. So this is a really great addition to a playbook, which you've caught right here.
Okay, so here's the fundamental drivers for Kosovo. It's their drug Simufilam. Sorry if I'm not pronouncing that right. Some trials came out that it was 98% effective across a range of biomarkers in the treatment of Alzheimer's. But one of the things that I considered a con on this is that it's still in phase 2. So what's driving this price movement is a lot of enthusiasm. And with that enthusiasm it comes uncertainty. And so that's why I think you're seeing a lot of the volatility that has arisen in this stock. Everything related to this stock has essentially been based on this Alzheimer drug. And so it's extremely volatile. When I was trading it that morning, this was the pre-market news that was released, and it showed that they had completed patient enrollment for 2 separate studies in the coming months, and also attached to that was that 98% effective. And here also I put some stats about Alzheimer's, and another big one on here is the short float's almost 20%.
I think that's a really big point which you glossed over. Alzheimer's affects roughly 50 million people worldwide. What you've done here is you've asked yourself the next question. All right, so the first question is, hey, is this news relevant? And you're saying, yes, it is, because of the efficacy of the study.
Absolutely.
And then the next question is, all right, well, they've got this great effective study. Well, what's the market possibility? And what you're saying here is, well, it's very large. This is a huge market. This is a huge market. If somebody were to actually get this right, it would be a $1 trillion plus drug. It'd be a huge drug, huge. It would change the company. And so adding that in there right there is well done right there. It's a huge opportunity if they get this right. As opposed to, look, we'll see other stuff like, I'm not necessarily a doctor or anything, but where the market possibilities are much lower. It's an effective drug, great, it will help some people, but not a lot of people have this particular disease, and it's not going to really make a lot of money, and that's not going to be seen as positively by the market. All right, good. So you got a high short float as well?
Mm-hmm. It's 20%, which is when I kind of started looking at taking a potential long. When you have a short float that high, and we'll get into the technicals in a little bit, but when you have a short float that high, and you have something positive, like positive catalysts like that, that's what I was thinking about taking it long, and we'll get into the technicals. Also, sometimes I take the average analyst price target. I know I've seen some traders here say, hey, analyst price target came out at 180, but I saw so many different price ranges that I just took the average. I don't know what you think about that, but...
Yeah, I think let's just skip that for another video. I'll say one thing about that, which is, the better question is there room for people to upgrade their price targets, and are there people who haven't covered the stock who are going to come in and start to cover it, which will bring a new catalyst to it?
So once I analyzed some of the fundamentals, I started looking at a breakout, and these are the variables for the optimal breakout. You obviously like elevator R-vol. Volume is the fuel to the fire per se. So I'll get into why I chose 5 later, but this was going to need a lot of volume to break through some of the levels that we'll see. Low volume on pullbacks kind of goes without saying. You don't want to see a whole lot of selling even on pullbacks. I wanted to see a strong move into the breakout area. News catalyst, that checks out. Critical levels broken. And it was breaking, in the pre-market, it was breaking 90. Also want to see market in favor and sector in favor. So here's SPY, and this is generally what I look at in terms of how the overall market's doing. You can look at Qs and whatnot, but this is what I was looking at for this. And the previous 2 days were pretty interesting. It came down at 420 and bounced at 425, and then the previous day it held that 425 and came up back into the 430s. And it closed pretty strong, and then futures held up as well. But with this Delta variant and a few other economic indicators that were going to be released this week, I thought maybe it could usher in some uncertainty. And I'm just trying to gather a big picture. I'm not actually saying, hey, because it's at 430, then Salva's not going to break it or break out. I just wanted to get as much information as I could and then make an educated decision based on that. And here's XLV, which is the healthcare sector. And the previous 2 days were kind of like SPY a little bit, but this one tapped all-time highs and retraced us a little bit at near that 130 mark. So I thought, hey, maybe another 130 test could be on the horizon, and if XLV is breaking out, I mean, SAVA could break out. So I just tried to maybe connect the dots a little bit and look. Now here is the SAVA daily. As you can see, when their Alzheimer's drug news was initially released on February 1st, this had a pretty high short float. I don't remember exactly what it was, but it was, I think, in the at least 25-30%. It was really high. And as soon as that news was released, this thing shot up 500%. And I don't remember exactly what the news was that caused that move down, because there's been so much news released in this stock. But it made a pretty quick retracement back, and then it's just been a little bit consolidating, tap 30, and then as more news has been released about these trials and the efficacy of it, it started to make some moves up. And the point I'm gonna make on this one is that a week before I made this trade, as you can see, on July 5th and actually I think it was July 12th, some news was released, some negative news was released about the Alzheimer's drug, and it made a really sharp downturn. And then another news was released and it came back up. So I thought, in terms of this big picture, that on the morning that it opened, it was opening around 95, and it gapped up a little bit over 90. And so I thought, if this goes over 100 with this news, with this short float, with everything combined, that it could make a real move back up to maybe even all-time highs, but it just needed the volume. And so that's kind of what my rationale was going into this trade. And here is the multi-time frames. I'll draw your attention to the hourly chart, 60-day. As you can see, that 90 mark was key. And when it was started to move up in pre-market above that 90, the only thing is it didn't really do a lot of pre-market volume, and SAVA just doesn't really do a lot of pre-market volume even when it makes strong moves, so that's not really something that I could have taken into account. I would have liked to, but I just kind of had to go with what I was given. And I just really like that it was making a move above 90 and into that 95 area. And here are some of the intraday fundamentals. Average volume is 4 million shares, which means it's liquid. RVOL, this is the one that I was looking at on other breakout days, saying, hey, what was RVOL like when it broke out on that? What was RVOL like when it broke out on that? And it looked like it was around 4 to 4.5 to 5, which is really awesome for this. I thought that was key. ATR is 7.6, which one of the reasons I look at ATR, well, multiple reasons, but in this case, it's just to manage risk and to know, hey, if it drops down 7.6, it could make a reversal, or you just got to kind of keep in mind ATR when you're trading, as it's just a general range that just good to keep in the general range of the stock. Short float we talked about, institutional ownership 80%, which is pretty high. Actually, it's really high. Float, market cap, and beta. So here is my battle plan going into SAVA. I generally like to look at gappers that have gone up 5% or gap down 5% for a gap and go strategy. I wanted it to open with a strong move on high RVOL. The pre-market volume, like we talked about, was only 1.5% of its average daily volume, which is pretty low, but that's just not a variable that I could have really taken into account because it doesn't do a lot of pre-market volume. I thought the catalyst should see shorts covering, but the most important factor will be if volume is high enough to carry SAVA through the overhead resistance. One of my worries with this, actually with a lot of stocks, especially volatile ones, is if it reaches a critical level and you take the breakout, you just get rug pulled down, multiple points. And so that was one of my worries, but I thought if I keep tight stops, the probabilities that they could have kept going was higher than a potential rug pull. So I just kept in mind that, hey, it's going to be volatile at some of these critical points, and just to size accordingly. And if I don't know, if it doesn't work, I'll know rather quickly and exit the position. These are my entry rules, holding above VWAP. Obviously, I wanted to hold above VWAP. We'll get into the trend candles that I use. It's like a variation of Heikin-Ashi, if you've ever heard of those or seen those. Tape shows buyers in control. I wanted a strong move. I mean, this is the big one. I wanted a strong move. I wanted like a door ram through it. I didn't want something that's chopping and grinding into it. I just wanted just a bulldozer straight through 100. High volume candles, and this is kind of what I was willing to risk. If it was low conviction, 10% of my daily stop. Medium conviction, 20%, and high conviction, upwards of 40, probably 30.
I like how you're making that distinction there before the trade and deciding to allocate different risks based on your conviction level. I like how you thought through that.
These are just a few questions that I asked myself and some sayings that I repeat to myself. The only one I answered no to this was, do I feel 100% confident with this trade I'm going to take? And so that's kind of how I judge my conviction and how much I'm willing to risk. And the picture on the right is something I say to myself some mornings, because I think when you repeat something, it helps improve memory. And so I just repeat this aloud to myself.
Yeah, I don't know if you want to feel 100% confident in a trade.
Oh, that's good.
Ever.
It's true.
I think you want to be having a conversation with yourself before, in the middle, before the trade and while you're in the trade about, hey, here are the reasons why it's a good trade. Here are the reasons why this trade may not work. I think yesterday we had a big bounce trade in BABA, and it worked out and it was looking good, but you want to have a dialogue about why it may not work out. So, you don't, I think if you feel 100% confident in a trade, you may not be as open-minded as you need to be. That's true. You may not be asking yourself the questions you need to be asking yourself about how this trade may not work. You may not be taking in the information that gets you to make a trade decision. Maybe there's information coming in to the trade where you need to take some off. If you're just 100% confident, you just sit with it, and that's not good. I mean, you should be confident that this is a good risk-reward trade. That's how you want to be thinking. This is worth me putting risk on. I should be in this trade. It's worth it. My win rate is okay. My risk-reward is good. If I take this trade 100 times, I'm going to do well. But there's just a lot not in your control, and you'll accept that.
So this is something I also do, just visualizing the potential openings. What I want to see versus kind of what I don't want to see. And obviously number one is exactly what I wanted to see. I wanted to see it open and possibly a VWAP retracement entry. I didn't want to see it open lower than V, or it open lower and then maybe do a VWAP retracement and kind of grind back up or start to look heavy at VWAP. I wanted it to just open strong, maybe pull back to VWAP and show that buyers were in control and do an immediate bounce from VWAP. I just wanted to see real strength, both on the charts and on the tape.
Yeah, I would add one more pattern for you to think about, which is value buying, support. Yeah. So value buying, comma, support, or an area where it's just not trading below. Yeah. I think if you really like the idea, you really like the setup, I want to add that pattern there as well. Like they're trying to push it below a certain level and they can't, and time is going by, and you're seeing that accumulation around a certain area. I think that's worth it. I think that's particularly true in stocks that have a high short float. Yeah. And those can be pretty good winners because and I don't think the stock necessarily has to be super strong intraday for it to be holding up certain areas that you can trade off of.
So this is opening bell. XLV kind of sold off a little bit, pretty sharply, but it was at all-time highs, so I wasn't too concerned. And volume was okay. It's not like it was real heavy. SPY, on the other hand, it opened pretty strong. I was comfortable with that. And so I took that into account. If SPY had opened real weak, I probably would have been a little bit more apprehensive about it. I put more weight on the market as opposed to the sector. But obviously I know some people that put more weight on the sector as opposed to the market too. So I was comfortable taking the trade considering that the market was in my favor a little bit more. So here's the trade. First off, I'll point out I use trend candles, so that's why the candles are all green. They weren't actually all green on that day if you use regular candlesticks, but it just kind of helps me visualize things a little bit better. And then I have color changing moving averages too. So, but anyways, also pivot points as well. Those are the red lines. But this opened very strong, and so when it opened, I was thinking, okay, we got 100. We got 100 on deck, and so I'll see what happens at that. But as soon as it hit 100, there's a few things that were going on here. It was at 1 ATR, which means I thought it could reverse here. It was also at 100, and so it's kind of a little bit of battle in my mind, thinking, okay, this is a critical level. It's at 1 ATR, and so I'll just see how it reacts. And so if it didn't have as clean a break of 100, and the bid stepped up, and large ask prints and offers lifted, and all these other things happened, I probably wouldn't have taken it. But this thing was so strong, didn't even pull back to VWAP. It didn't even hesitate at 100. It just blew right past it. And from what I was saying earlier in some of the pre-market, or when I was analyzing it in pre-market, that's exactly what I wanted to see. Maybe a little bit of a pullback, but this was already at, I think it's a 5 RVOL or 4.5 RVOL, which was absolutely perfect. So blew right past 100, and I entered. And my initial profit target was around probably at least 108, 110. I don't remember exactly what my profit target was, but usually it's around maybe the next pivot point or the overhead resistance. But I started to take profit when I thought, hey, this is due for a pullback. It's pretty extended from VWAP. It's at the pivot point. And so I scaled out a little bit there, and I was kind of also, honestly, I was thinking maybe if we see a VWAP retracement, could possibly even add to it, but we didn't. And so I thought this is due for a reversal. I didn't anticipate it going past 100. 110 and going all the way to 120, but I held and eventually ended up selling at once the trend candles started to, or once the sentiment started to change, and you see that big sell candle right there after the rejection from the 120 resistance and the pivot point. So I scaled out most there.
When you entered, what was your stop?
95. It was low day. It was also another pivot point right down there, but it was essentially low of day. I mean, I got pretty good RR out of it. I mean, it's one, but yeah.
I'm not sold on the 100 technical level. Go back to your daily chart.
So you can see it held 100, and then, I mean, it's got a little bit of resistance right around that 100 area. It's not necessarily a line in the sand, but it's just that area right there.
Yeah, I mean, it broke down from that 100 area, didn't it? I don't know if that's really even 100 where it really breaks down from. Anyway, it looks like it could be a little bit lower than that. But it does start to break that uptrend near, it looks like around 98-ish, and start to go down, and has a pretty big down move. So that area is going to be resistance. I don't know that it's exactly 100. I think that's something to think about. I also do think when it gets back above 90, the momentum is back to the upside.
Yeah.
You know, when I look at that chart, when I look at that daily chart, the momentum comes out of it around 98 and trades down, and then if it reclaims 90, the short-term and medium-term momentum are back to the upside. So I don't know that I love your 100 level. From technical analysis. And I do think when you think about the stock, I mean, this is a momentum stock overall. Momentum stocks trade differently when they're in their growth stage than other stocks. It's super important for you to understand when the momentum to the upside is back on. It's above 90 in this case. And so the reason I bring that up is because that gives you an opportunity to think about entering before 100. that gives you an opportunity for you to be thinking about some setups for you. You know, maybe you want to make an opening drive trade right when it opens up.
Yeah.
You know, maybe there are levels you can get in. If you go to the intraday, I see better executions on entry for you. I see, you know, right away on the open as a potential opportunity. I see above that. It almost looks like it's, I can't read that. Is it, it's 198, 96? Yeah, I mean, I definitely see an opportunity above 98 to start there. I mean, it looks like it goes up to 98 and stalls and then gets above there and holds there. So when you go back and you look at these trades, you really have to be careful about your entries. Your stop is pretty wide.
Yeah.
I understand the ATR is big in this, but you've got a $5 stop in something that I'm not sure you really couldn't have been in earlier for the same trade. Well, what's your feedback there? What are your thoughts?
No, that's good. I think in my stage of my trading, I'm a little bit more hesitant to take the first 15 minutes. Okay. And it's just because I want to see that at least a trend is forming, because I feel like I've gotten caught in so many trades where I take it and it just rips right back down.
But doesn't it get above 100?
Oh yeah, that's where I took it. Or I think I took it right at 100 when it broke.
Yeah, and what time a day is that?
I think it's around 9:50 New York, Central time, or Eastern time.
So you don't want to take trades in the first 15 minutes, but you're okay in the first 20 minutes?
Yeah, sometimes I wait for the 15-minute candle to close. It's not an exact science. I think sometimes I just feel it out a little bit, but maybe I just need to keep stats on that, because maybe I'm more apprehensive in the first 15 minutes to take breakouts, and maybe I need to work on that. But,
so look, if something's really going to run for the day, and you have big players that are interested in this stock, a very common pattern is the volume comes in right away. And there's price movement right away because they can't wait. They're scared to wait. The big players are scared to wait. They want to buy this thing up to $150 or $125, and they want to buy a lot.
Okay.
And so they can't really risk waiting in certain, particularly in a momentum stock. And so they'll show you their hand. They're going to tip their hand early on the open in the first early.
Okay, good to know.
And so that's a common pattern. Yeah, so I don't know if you needed to get in at 100. And the reason why I don't like you having to get in above 100 with a stop of $5 is because you're going to judge how much you can risk by giving it a $5 stop. And for you to trade this with a little bit more size is going to require potentially giving it a little bit of a tighter stop.
Okay.
That's a 5% stop. That's a 5% move in a particular stock from 100 to 95. That's a big stop.
Yeah.
So I think about that. But I like the way you scaled out of it. I think that was pretty good.
Yeah, I generally.
I just
I'm
think
more
to me
apprehensive
this
about
trade is there's a news catalyst. It's above 90. And the momentum's back to the upside again, and I've identified a stock that can really go up, and I need to figure out how to get into this thing.
Okay.
And I don't want to tell you exactly how to do that, because there's a lot of different ways to get in, and it'll make more sense. What makes sense to me may not make sense to you. Like, I would buy the opening print.
Oh.
That makes sense to me. Okay. I would watch the stock, it's not going down, and I would buy it. Okay. Or I would have bought that in the pre-market. I think you did a good point. You brought up a good point, though, is there wasn't a lot of volume in the pre-market, so that might have caused me to stop. But I would have bought this right away and given it a run. That's how I look at certain markets, and that's a very legitimate play. I don't want you to think that is the way to trade it. It is the way that makes sense to me that will work.
Okay. And I think you're right. I think at this stage, I'm apprehensive, and so sometimes I stall too much and I miss the trade. So at this stage, I think I'm just apprehensive about some entries. And you're right.
No, and there are other people that will say, I don't want to trade in the first half hour.
Yeah.
I want more information. Okay. And those people will design systems to help them then. And so, all right, they're going to have to wait for the first 30 minutes, and they'll do that there. So think about that. I don't know that you need to wait to 100, but if you want to sort of wait 30 minutes or something before the market, after the market opens, okay, and we'll sort of go from there.
Do you think I'm chasing this entry though?
Yeah.
Yeah.
I do. I think this is about. I think that you buy this right away.
Okay.
I think you had a news. I think you, like I said, you have the news catalyst above 90. It's go time. Yeah. You don't want to look at charts on your daily charts in such a linear fashion. You want to think about them more in terms of psychology. Okay. The psychology is out of the stock to the upside when it got below 98 and starts to trade down. The momentum is out of that stock. Momentum in, momentum out. Now when the momentum is out of a stock that's a growth stock and going up a lot, we have to now go find where it's going to stop going down. But the momentum is out of it. When the momentum comes back into it and the stock is still in an uptrend on a longer time frame, and we see the momentum come back in, now the momentum, these stocks can skyrocket, particularly in this market. And we need to figure out how to get in to those momentum stocks at good prices. And the price is important because the price sets how much you can risk. If you can get in on an opening print, you can give that $1. You're getting in at 100, you've got to give it $5. All right? Even if I don't have as much conviction getting in right away with a particular stock, I can still put on more risk than you can buying that stock above 100.
Absolutely, yeah. That's good. I didn't look at it like that. You're right. So this is my trade review. When trading a bullish news catalyst near critical levels, RVOL provides the necessary fuel for stronger than normal moves outside of its ATR. And so that was one of the reasons for I entered at the 1 ATR. RVOL closed the day around 3. We look for strong moves on high volume into critical levels, quote unquote, volume precedes price. And when we have the wind at our back from the overall market, sector, etc., conviction is strengthened. I didn't necessarily have the wind at my back, but SPY looked good.
You did a really good job holding that 50%.
Yeah, that was pretty hard for me to do, to be honest. But there was no I didn't see any reason to sell it. There was no reason to sell. And I think this is the big one that we just talked about, is that I hesitated a bit before entry. So I just need to work on my confidence. And I think as time, I mean, even I can look back at a year ago for my playbooks, and I've gotten so much better at holding stuff and timing stuff. And so this is just one more area that I just need to work on. And like I said, the feel of SOF, I had a lot of energy. And
when we're looking at playbook trades, and when we're looking at traders, people always sort of ask me, hey, what gets you interested in a trader? When somebody's here as an intern or as a student, what gets me interested? And so the thing that I really like about your playbook here is one of the things that interests us, which is there's solid diligence. There's solid diligence in this presentation. There's solid diligence in this playbook. That's pretty strong. I don't care whether or not I think the technical level that you were looking at is right or not, for the most part. Okay. I do think I'm right, but I've been doing this longer than you.
Yeah.
And look, momentum in and momentum out is an important technical principle you'll learn over time, and it can be really powerful. But that's not as important as you thinking clearly. You thought clearly through this trade. I would subtract your technical level from my technical level, but that's fine. You're thinking clearly through this. Yeah. I think you did a really good job holding on to that second tier, or that last 50%. That was really, really solid. I thought you did a really good job adding VIX at the beginning of the presentation. I thought you did a really good job looking at multiple time frames for the presentation. And so it was easy to understand. It's a trade that works. Your stock selection was strong. So those are all the good things. And then now you just got to try and figure out how to keep making this trade your own. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.